The investment landscape is currently undergoing a tectonic shift. For the last decade, we have watched asset-light software and tech companies completely dominate the market. But as we analyze the data today on the US Stockpicker podcast channel, a new, very different theme has emerged among institutional circles. We are seeing a massive rotation away from the digital and back toward the physical.
That is exactly right. The market is aggressively rediscovering the value of things you can actually touch. We are talking about the HALO theme, which stands for Heavy Asset, Low Obsolescence. As artificial intelligence threatens to disrupt service-based and software industries, investors are flocking to companies with moats made of steel, concrete, and land. These are assets that code simply cannot replace.
It is a fascinating pivot. The sentiment surrounding these Halo stocks has gone from being viewed as boring to being viewed as absolutely essential. When we look at the dimensional scoring, the institutional sentiment is sitting at a massive 88 out of 100. Major funds are actively rotating into these physical moats. It really feels like an AI-proof narrative is taking hold.
It is the ultimate undisruptible asset class. Think about it carefully. AI can write sophisticated code, it can generate beautiful art, and it can manage endless data. But it cannot move freight across the country, it cannot refine fuel, and it cannot mine copper. Whenever tech valuations start looking stretched, we are seeing high conviction buying in the industrials and energy sectors.
And we also have to factor in the macroeconomic environment, particularly inflation. In an inflationary environment, the cost to build a new railroad or a new refinery skyrockets. That dynamic inherently makes existing heavy assets much more valuable simply because competitors cannot afford the massive capital required to enter the market.
Precisely. That replacement cost is a massive fundamental driver. It is why the fundamental value score for this theme is a solid 75 out of 100. We are seeing a positive value rotation as 10-year treasury yields remain sticky. However, that heavy asset nature is a double-edged sword. These companies require massive capital expenditure.
That brings us to the primary risk factor, which is the debt trap. Because these companies are so asset-heavy, they often carry significant debt to fund their daily operations. If interest rates stay higher for longer, the cost of maintaining these physical assets could easily eat into their dividends.
That is the exact metric to watch. If the spread between corporate bonds and treasuries widens, or if the 10-year treasury yield spikes above 4.8%, these halo stocks will underperform. The heavy nature becomes a financial burden. But right now, the overall rating is a 77 out of 100, making it a strong thematic buy for a 1 to 3 year horizon.
Let us drill down into the specific sectors and the individual equities. To properly play the Halo theme, it is not about finding a single stock, but rather a basket of companies that completely dominate their physical niche. For instance, the railroad sector featuring tickers like UNP and CP. It is virtually impossible to replicate thousands of miles of existing track.
Railroads are very bullish right now. Then you have the energy sector with giants like XOM and CVX. Global energy demand requires physical molecules, not just digital bits. We are also looking at waste management with WM and RSG. Landfills are arguably the ultimate low obsolescence asset. And finally, materials, with Caterpillar and Deere providing the heavy machinery needed for global infrastructure buildouts.
Looking at the trend versus trade analysis, the multi-year rotation out of growth at any price and into value with a moat is clear. But the execution requires patience. Many of these names are trading near all-time highs. We need to be highly selective. Let us break down the buy and sell scorecard, starting with our top pick, Union Pacific, ticker UNP.
Union Pacific is the absolute cleanest chart in the entire Halo universe right now. While other stocks have gone completely parabolic, UNP has just completed a multi-month base breakout. It has a high conviction rating of 82 out of 100. It offers the best combination of fundamental value and technical room to run. The trade here is to buy the retest of the breakout level at 252 with an upside target of 287.
Moving to the other end of the spectrum, we have Caterpillar, ticker CAT. This is a fascinating scenario because it is a victim of its own success. It has surged nearly 45% in a straight line, which leaves it dangerously disconnected from its fundamental valuation. The rating here is a 35 out of 100, making it a sell or reduce.
Caterpillar is in a classic exhaustion phase. It is trading around 830, while the average analyst target is only 732. Technically, it is trading 12% above its 50-day moving average and a massive 43% above its 200-day moving average. This is a classic sell-the-rip setup. Investors should trim 50% of the position immediately and rotate those proceeds into a breakout like UNP.
It is a perfect example of a market divergence. We have leaders like Caterpillar that are technically overbought, and laggards like Deere, ticker DE, which is facing selling pressure and testing critical support at 593. And then we have ExxonMobil, ticker XOM, acting as the defensive anchor.
Exxon is a great hold. It won't give you 50% gains overnight, but keeping a 20% allocation there will protect your portfolio if the broader market turns volatile. It is currently digesting previous gains and trading just below its 50-day moving average.
There is one more fascinating bridge between the AI narrative and the Halo theme, and that is Vertiv Holdings, ticker VRT. They provide the physical cooling infrastructure for AI data centers. It is currently rated as a hold for long-term investors, but it presents a highly compelling setup for swing traders.
Vertiv is the picks and shovels play for AI. The growth is undeniable, but it is priced for perfection. For long-term holders, you set a trailing stop at 295 to lock in gains. But for swing traders, VRT is in a power trend. The RSI is around 67, so it is hot but not exhausted, and the MACD histogram is expanding.
Let us transition fully into the swing trade strategy. Institutional FOMO has created a high probability window. We are not looking to buy and hold at these specific extended levels. We are looking to capture the final 5 to 10% of the current momentum leg. What are the parameters for the Vertiv swing trade?
For Vertiv, we are looking at an entry zone between 316 and 320. The target is 345, representing a 6 to 8% upside, with a strict stop loss at 304 to protect against a trend reversal.
We also have Cummins Inc., ticker CMI, breaking out as global demand for heavy-duty engines remains incredibly robust. The RSI is over 75, which is technically overbought, but halo stocks tend to stay hot much longer during these major sector rotations.
Exactly. For Cummins, the swing entry is between 650 and 655 on a minor intraday dip. The target is the psychological round number of 700 with a stop loss at 635. And finally, we have Amcor Group, ticker EME, an infrastructure specialist consolidating near all-time highs. The entry there is 855 to 860, targeting 900 with a stop loss at 835.
Excellent analysis. It is crucial to remember that with these swing trades, we are looking at a 3 to 10 day time horizon. If the target is not hit within 2 weeks, the momentum has likely faded. Do not chase the open with market orders. Always use limit orders within the specified zones.
And as these stocks approach their targets, a smart strategy is to sell half the position and move the stop loss to your entry price. That creates a risk-free trade for the remaining balance.
As we wrap up today's deep dive on the US Stockpicker podcast channel, we need to clearly outline the actionable takeaways for our listeners based on the data we have covered. Let us summarize the core strategy for navigating this market rotation.
Absolutely. Here is the definitive breakdown. First, regarding news sentiment analysis, the market consensus is overwhelmingly bullish on physical infrastructure as the ultimate AI-proof asset, with high conviction buying in industrials and energy. Second, for fundamental and strategy analysis, the strategy is to rotate out of overvalued tech and into companies with massive replacement costs and high barriers to entry, maintaining a core 15 to 20% allocation in the XL1 or XLE ETFs. Third, regarding swing trade analysis, we are targeting 3 to 10 day momentum bursts in stocks like VRT, CMI, and EME, utilizing strict limit orders and capitalizing on positive MACD divergence. Fourth, for buy and sell recommendations on when to start investing, the broader theme requires patience. You should wait for a 3 to 5% sector dip while immediately trimming overextended stocks like CAT and rotating into fresh breakouts. Fifth, regarding what price point to start investing at, you should deploy capital into our top pick, UNP, on a dip toward the 258 to 260 range. Sixth, regarding when to leave the market, you must exit or reduce positions when a stock enters an exhaustion phase, trading dangerously far above its 200-day moving average, or if the 10-year treasury yield spikes above 4.8%. And finally, seventh, regarding what price point to leave the market at to mitigate risk, long-term investors should set a stop loss for UNP at 240, while swing traders must respect tight stops, such as exiting VRT at 304, CMI at 635, and EME at 835.
The information provided here and on this channel is for general informational and for education purposes only. It does not constitute investment advice, financial advice, trading advice, or any other sort of advice. We makes no recommendations regarding investment decisions based on this information. You are solely responsible for your investments. Please conduct your own research and consult qualified financial advisors before any investing. Clickbait video title: Urgent, Sell Tech Now, the AI-proof Halo strategy revealed. Stock Star Trade podcast, growth stock picks, upside potential stocks, technology stock predictions, pop stocks.